A seller does not accept an offer only because the price is highest. Two buyers can offer the same amount, but one looks safer, faster, and easier to close. The seller is judging the whole deal, not only the headline number. Sellers do not judge offers by price alone. They judge certainty, timing, financing, contingencies, and trust. An offer far below market value may signal that the buyer is not serious or does not understand the property. Price still matters because it sets the starting point. Strong pricing shows respect for the seller's position. A slightly lower cash offer may beat a higher financed offer if the seller fears appraisal or loan problems. Financing changes how reliable an offer feels. In everyday life, a pre-approved buyer with clear funds may look safer than a buyer who still needs uncertain loan approval. Sellers worry about deals collapsing after they stop marketing the home. Closing date can matter when the seller is moving, buying another home, or managing debt. Cash offers can be attractive because they remove lender risk. That convenience can sometimes beat a slightly higher financed offer. A cash buyer may close faster and avoid appraisal problems. Inspection terms also change the risk because repairs can reopen negotiation after acceptance. Inspection, appraisal, financing, and sale of home contingencies all affect the seller's risk. Fewer contingencies usually make an offer cleaner. Contingencies are conditions that let the buyer walk away or renegotiate. Earnest money signals seriousness, but only the contract explains when that money is at risk. The closing timeline can change the decision. A seller moving for work may prefer a quick close, while another seller may need extra time to find a new home. That is why the best offer often matches the seller's calendar. A seller may prefer a reliable closing over a slightly higher number filled with risk. The amount matters because it signals seriousness if the buyer backs out without protection. Earnest money shows commitment. A larger deposit can reassure the seller that the buyer is not casually tying up the property. A clean offer is not always the highest offer, it is the offer most likely to close. Inspection terms can make or break a close offer. A buyer who demands every small repair may look harder to deal with than one who focuses on major issues. Sellers often prefer realistic inspection expectations. Financing strength matters because a loan problem can kill a deal late in the process. If the lender's appraisal comes in low, the buyer may need more cash or a price reduction. Appraisal risk matters when the price is aggressive. A seller may reject a high offer if it seems unlikely to survive appraisal. Buyers improve their chances when they understand the seller's pressure without ignoring their own protection. Personal letters sometimes influence sellers, but they are not the foundation of a strong offer. Practical certainty usually matters more than emotion. A warm letter cannot fix weak financing, vague timelines, or risky contingencies. The accepted offer is usually the one that balances money with confidence. Net proceeds are different from sale price. Seller credits, repair requests, unpaid fees, and closing costs can reduce what the seller actually receives. A lower offer with fewer concessions may be stronger than it appears. Inspection terms can make an offer feel safe or unpredictable to the seller. In a hot market, sellers may demand clean terms. In a slower market, they may accept more conditions. The same offer can look different depending on competition. Market conditions change seller behavior. An offer becomes stronger when its price, timing, financing, and contingencies all support closing. The buyer's agent also affects confidence. Clear communication, complete documents, and realistic deadlines make the transaction feel more organized. A messy offer can make even a good buyer look risky. A flexible closing date may help when the seller is coordinating another move. That chain can feel too fragile. If the buyer must sell another property first, the seller is exposed to a second transaction they cannot control. Sellers may reject offers because of uncertainty about the buyer's current home. Earnest money can signal commitment, but contingencies decide how strong that signal really is. Sometimes sellers reject because the offer insults their expectations. Tone and strategy matter when opening a deal. Even if the market says the home is overpriced, a very low number can shut down negotiation emotionally. The seller reads the offer as a package, not as a price alone. The seller compares price, financing, deposits, contingencies, timing, and confidence all at once. Multiple offers create ranking, not just negotiation. A buyer needs a complete package, not one impressive line. A seller may prefer a reliable closing over a slightly higher number filled with risk. A backup offer can still matter. If the first deal fails inspection or financing, the seller may turn to the next best buyer quickly. Staying professional can keep the door open. A buyer who understands the seller's pressure can write cleaner terms without overpaying. Good offers match both financial and practical needs. Buyers should ask what the seller needs when possible. A rent-back period, flexible closing date, or simple repair approach may solve a problem money alone does not solve. Financing strength matters because a loan problem can kill a deal late in the process. Sellers accept offers that feel profitable and likely to close. They reject offers that create too much uncertainty, delay, or future renegotiation. Understanding that helps buyers compete without blindly raising price. The strongest offer is often the one that gives the seller confidence the deal will close. It is the offer that gives the seller confidence about money, timing, paperwork, and follow-through. The strongest offer is not always the loudest one. That is why preparation before making the offer often matters as much as the number itself. Before acting on seller offer choice, connect the offer to the written deal. Before acting on seller offer choice, connect the seller to the written deal. Before acting on seller offer choice, connect the buyer to the written deal. Before acting on seller offer choice, connect the contract to the written deal. Inspection terms can make an offer feel safe or unpredictable to the seller. A seller may reject a high number if the offer feels fragile. Weak financing, unclear timelines, heavy repair demands, or a tiny deposit can make the deal look risky. Another buyer may offer less money but better certainty. That is why buyers need to understand the seller's risk, not only their own budget. A seller may also compare emotional certainty with financial upside. If one buyer sounds difficult, keeps changing terms, or sends unclear documents, the seller may worry about weeks of stress. A calmer buyer with organized financing can feel safer even when the headline number is slightly lower. This is also why communication matters. An offer with organized documents, a clear lender letter, and realistic timelines feels different from one filled with uncertainty. Sellers want price, but they also want the confidence that the buyer can finish what they started. A seller may also think about reputation and hassle. If an offer looks likely to lead to arguments after inspection, the seller may prefer a cleaner path. The best offer reduces the number of ways the deal can fall apart before closing.